Thank you so much. Good afternoon, ladies and gentlemen, and it's a great pleasure to be here, and I want to thank ICMA for the invitation. Yesterday, we launched our paper on building more effective and attractive markets in the EU. This is the result of the work of an ESMA board task force, which was launched at the end of last summer, culminating in the collective support of the position paper by the whole board last week, actually here in Brussels in a meeting hosted by Jean-Paul Servet at the FSMA. The position paper outlines our observations regarding the state of EU capital markets and includes our strategic messages on how these can be strengthened. As ESMA, we share the view that there's an urgent need to improve EU capital markets, to support the financing for Europe, putting citizens and businesses at its heart. The renewed urgency and momentum to strengthen our capital markets comes from the realization that we are facing challenges that we cannot easily overcome without rethinking how our capital markets function. We need robust capital markets capable of mobilizing substantial long-term investments to finance green and digital transitions. We also need a balanced and sustainable financial ecosystem that offers businesses reliable and varied sources of financing to complement our heavy reliance on bank financing in the EU. Market-based financing is currently underutilized in the European Union compared to some of our international peers. This has a substantial and obvious impact when it comes to the attractiveness and competitiveness of EU markets globally, as businesses and investors often turn to markets outside of the EU to satisfy their needs. Crucially, we also need investment, and for this we need to have strong capital markets and financial firms that put the interest of investors at their core. The ESMA position paper builds on these considerations and develops a set of ideas that we believe could shift the needle. Naturally, given that there is a consensus on the overarching need for stronger capital markets, several of our recommendations broadly align with the actions being considered, like Valerie said already, by Eurogroup and the Council, as well as those put forward by other wise minds, such as Enrico Letta. Yet, importantly, the ESMA paper introduces a perspective of capital market supervisors. It brings the views to bear of those who oversee the day-to-day functioning of capital markets. We at ESMA have therefore thought to take a holistic approach and be comprehensive in our considerations. We're putting forward 20 different recommendations over 3 dimensions, looking at the capital markets from the interest of investors, the needs of businesses, and the regulatory and supervisory framework. Firstly, to put investors at the core of our capital markets, we need to ensure that they are supported in their investment journey, especially retail investors. We believe we need to improve citizens' access to simple, suitable products and independent advice, combined with measures to improve financial education. This is important to ensure that citizens can realize their financial goals, whether these are in relation to saving for their old age, buying a house, or supporting their children's education. At the same time, putting savings into projects with a more long-term view might not only provide citizens with an interesting return, but also support economic growth and innovation. In fact, according to the think tank New Financial, a 5% shift in household savings from deposits into capital market investments in the EU could unlock an extra 1.8 trillion euros. To help citizens navigate different saving options, better financial education is a must. Improving financial education cannot happen overnight, but it must be reinforced to support current and future generations in building financial knowledge across their lifetime. Secondly, to create more liquid European markets that can better serve companies' funding needs, we must have capital markets that provide diversified funding sources. In this regard, we support measures to strengthen the ecosystem for public companies and reducing market fragmentation. We collectively should address barriers to market integration proactively. Particularly with regards to market infrastructures, we should remove obstacles to allow pan-European markets to emerge and grow. Beyond listing, we also see a need to support diverse funding options, including venture capital and private equity, which can provide alternatives to or lead the way to a company eventually going public. Certainly, and as mentioned earlier, the ESMA board has also considered how the regulatory and supervisory framework in the EU can be improved. As regulators and supervisors, we are well placed, I believe, to observe the need for more agility, responsiveness, consistency, and efficiency in our framework to reflect the modern realities of how capital markets function. To get there, we need to look at how legislation is formed in the EU, at the legislative process, so that co-legislators do not get bogged down in lengthy, detailed discussions, but instead trust the regulators to take forward their strategic visions in the technical detail on the ground. And once in place, we need to be able to react to developments that can affect the practical functioning of our rules. ESMA should have the effective forbearance powers, like other global regulators, to handle those situations in a swift and appropriate manner under appropriate accountability frameworks. When we talk about the attractiveness of our capital markets, these regulatory framework issues may not always be at the forefront of our minds, yet they're crucial aspects to the capital market ecosystem. Speaking of crucial elements of proper functioning capital markets, I believe effective supervision remains pivotal. National supervisors do tireless work in keeping capital markets in check, as does ESMA. Our experience in directly supervising certain capital market players has grown over the past 13 years. In the various contributions to the debate on the future of EU capital markets published over the recent months, we have, of course, noted that many of them cover the supervisory setup as one key aspect. Enrico Letta, in his report, suggested shifting the supervision of the most integrated markets or significant market players to ESMA. And Christian Noyer indicated ESMA should be entrusted with large supervisory mandates. Personally, you won't be surprised to hear, I believe these proposals merit consideration. For most areas of financial markets, it makes sense for supervision to remain at national level. But where large entities operate with a pan-European model and their services are oriented to a number of different member states, I believe there's merit in considering European-level supervision very much on a case-by-case basis. For these types of entities, a more centralized supervisory model would enable a more holistic overview of the risks they may pose, looking beyond the national home supervisory perspective. It could also enhance efficiencies and improve the consistency of how they are supervised. As most supervision is and will remain at national level, I want to also emphasize, as we do in the ESMA position paper, that we should continue to improve in terms of supervisory convergence and further enhance the tools that allow us to, for instance, increase cooperation in cases involving large cross-border firms, strengthen cooperation on selected tasks, such as having coordinated supervisory teams, and centralizing data collection and processing. Drawing on the ideas presented in the paper, we will continue engaging with policymakers. We want to actively contribute towards moving forward decisively and urgently in further developing our capital markets in the EU and making them more effective and attractive. Let me now move on to an area where progress is being made already in addressing market fragmentation. The creation of consolidated tapes will finally make it possible to assess the evolution of prices and trading across the whole EU market in a timely manner. In the US, the consolidated tape is an integral part of the market landscape since decades, with investors benefiting from the transparency that it brings. ESMA's support for the establishment of consolidated tapes is long-standing, and I'm glad that the co-legislators have now completed our role with a mandate to select the most suitable provider for each of the 3 consolidated tapes for bonds, equities, and OTC derivatives. As this is a new endeavor for ESMA and for European markets, it is important to have feedback from stakeholders across the spectrum on how best to do this. The setting up phase entails not only preparing the technical standards needed for the consolidated tape provider to function, but also specifying the expectations placed on applicants in the selection procedure. From the workshops we held earlier on this year, we understand that the governance of the consolidated tapes, the associated costs, and the fees for data users, as well as the consolidated tape provider's ability to process data, are paramount for the attractiveness and the functioning of the consolidated tapes. To continue the fruitful dialogue on these important topics, I would invite all of you to respond to our consultation, which we are launching today. The ambition on our side is to finalize the first selection process for the consolidated tape for bonds in the first half of next year. And we will thereafter proceed with the work for establishing the consolidated tape for equity and finally for OTC derivatives. Apart from the process for the setup of the consolidated tape providers, the MiFIR review also included a major change to transparency regimes for non-equity, where the intention is to further differentiate between bonds and derivatives, adapting the respective disclosure requirements for pre- and post-trade transparency. As you may have seen, ESMA has just published a consultation on the review of the RTS on bond transparency. Our proposals aim at enhancing and improving transparency in the bond market and further strengthening the information available to stakeholders. Our intent is to ensure the regime is simpler and more effective than the one that we have currently. Our proposals aim to ensure the right balance between an adequate level of transparency and appropriately calibrated deferrals. As always, we are eager to read your feedback, and again, I invite you all to respond to the consultation. We intend to publish our final draft regulatory technical standards on this by the end of the year. In conclusion, I'm delighted to having been able to share with you the main recommendation in our paper on effective capital markets, which we published yesterday, as you probably saw. I very much hope that the recommendations will be taken forward in the next European legislative cycle, and I think Sean just mentioned that it will certainly be a priority for the next Commission. To really make progress, we will, however, also need the commitment of industry and of policymakers at national level. At the end, we should all pull together to make our European markets more effective and attractive. In the meanwhile, at ESMA, we will continue to do our bit to build European capital markets day by day. Our implementation work related to the MiFIR review is a good example of how, at technical level, we can make progress. To move forward decisively, we are glad to see the political commitment and urgency at the most senior level and stand ready to support and advise as necessary. Thank you very much for your attention.